Hi everyone, welcome to a massive Monday market update. I'm going to crack straight in, got some great things to show you today. I'm going to first start on the macro headwinds because this chart tells you everything you want to know about what is coming for the CPI print hitting on Tuesday. Now, there's all these rumors coming out that CPI is actually going to be higher, so core and plain CPI is going to be higher than inflation rate. So that to me tells me that markets are going to face some serious headwinds in terms of risk markets. We're going to contract into that event and we're going to have to wait for more data afterwards. The US dollar index rising tells us that the market is pricing in that the Fed is going to have to get a bit tougher again on rates and be a bit more hawkish. So this is looking fantastic, I think, up to about 104. As long as this is going up, risk assets like crypto and stocks are going to face those headwinds, which we were just talking about. So over this week, I think, yes, it's going to be a little bit bearish, depending on what we see on Tuesday. If there's a bit of a surprise and it gives us all a bit of a neutral response, it comes in, neutral or inflation lowering again, then happy days. I think DXY reverses and then we see also risk markets run, but we've been seeing, because they're using a new weighting system to come to the CPI conclusion, the last few months have actually been revised higher. So this month doesn't look too flash in that respect. We are seeing a few percentage points tick up, but regardless, DXY, the US dollar currency index, versus a basket of fiat currencies is showing a strengthening in the dollar. So we have to be careful. And as we pivot over to, let me just go into the realized price, because I think we need to have that mid to longer term focus still there. And the realized price is the average cost basis of Bitcoin holders. And that is just so important. If we go back to previous cycles, getting above it and holding above it, again, so important. We've often used it as resistance and support. So again, we're above it and we're coming back down to retest it. So that's now at around 21,800. That area, that's not around 21,800. That is at 19,800. So 20,000, that psychological resistance barrier is going to be enormous. And it is also where we see other confluent indicators coming in at 20,000. So I'd be very surprised if we lose 20,000 in this current state of the market, but anything is possible. Again, there's a really nice confluence indicators, including the 200-day moving average sitting around that $20,000 mark. So I think that is that next point where we have to see, okay, was this rally just a bit of a flash in the pan, deck that bounce in 2023? Or are we showing signs that we've got support there? And this is just a lower high as we move higher. It's not going to be pretty. It's not going to be simple. It's going to be choppy. And look, 20,000 is definitely on the cards. What are we at? 21,800 now, 21,700 now. It definitely looks like we want to come back down to at least 21,000. So just keep that in mind. But the realized price, if you go back through multiple cycles, whenever we're underneath it or just near it, has been areas of tremendous financial opportunity. Look back in 2017, we were around it. This was much cleaner. We breached it once and we breached it again on the way out. Now we've done it a few times, but regardless, if you're looking at extremes in the market where you can dollar cost average in or buy this market, it is a pretty good entry point. Now let's look over at Ethereum, because Ethereum is broken down from this a flag that we were looking at here. You see the flagpole going up and oscillating in a flag there. It can be drawn multiple ways, but that's how I had it. Now, to me, this doesn't look flash at all, because we were at the top of the range, couldn't break out. We actually broke down from the bear flag. This, to me, looks like it's consolidating before another leg lower. I've got this box here because this is a big gap in volume on the right-hand side here. RSI looks pretty horrible, but momentum falling away. I think this box is where it wants to go. And if you roll out, let's say, the Fibonacci retracement, there's some really nice areas in here. It was at 1,428, but I think this is that golden area around about 1,400, let's say, give or take. So monitor that. Ethereum is looking a little bit heavy here. So broadly, the market is telling us that we're looking for that pullback. Bitcoin doing very much the same thing, wanting to come down a bit lower. That's my read. So it's trying to hold up here, but yeah, again, none of the momentum indicators are looking too flash. And it's quite clear we're in this tiny little range here. If you just got the ceiling here, 22,500 and also 21,000 down here. This is the daily, isn't it? So if we just roll out, so below the 21 moving average, which is never a good sign if you're looking for that shorter term trend. I just want to bring up the 200-day moving average down here, because this, to me, looks like a pretty nice spot, that 20,000 area. 20,500, probably about right, because of this little volume support here. over here and just here as well. This pocket is nice, so we could absolutely see a bit of a drop down before we come back up. These things are healthy in uptrending markets. It looks like we've started a new trend here, but we need to find this higher low support. And if we don't, then we're coming back down here and really giving this area a shakeout beneath 20,000. But just keep that in mind. CPI, again, is throwing things a little bit haywire here. It definitely looks like the market's trying to price in a poorer print. So keep that in mind. Just wanted to show you over to LTC. A lot of altcoins just look like they want to cool off and they're breaking down from pattern. So this was could have been an ascending wedge here. You can see here with the volume profile just holding that up, but it's broken down all the way here, grinded up, and then it's broken this trend. You can see it's gone underneath. It's coming up retest, big wick up into volume, and now this can fall over. So a lot of altcoins looking like that. A lot of them just looking to create that floor a bit lower is my read. So everyone just stay a bit safe out there moving into the CPI print. I would wait to take aggressive risk, wait for more data. It can't hurt. It gives you a little bit more time to make those decisions. And let's say they come out with a really hard CPI number and the market just tanks. You will be very, very grateful that you had bids lower, or you just held off just that little bit longer. So have a wonderful day, guys. We'll catch you again for our Altcoin Bible on Wednesday. Take it easy. Ta, bye.